Around $1.8 million I invested in these stocks we're going through here today in this video. I'm going to show you the entire public count. We're going to talk about every single one of these stocks in this video. I'm going to share my thoughts about these stocks for 2024. Which ones do I think are going to perform the best in 2024 versus, let's call it, not perform as well. We'll talk about the hedges in this portfolio. We'll talk about what stocks am I going to likely continue to buy in 2024 and all those sorts of things. So I just want to jump straight in this. Appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed to the channel. Hope you get good value out of today's video, okay? Alrighty, so first stock up here, this is the biggest position in the public count, is Meta. It's about $605,000 of the portfolio right now, which makes it, let's call it 30% plus of the public count overall. It's an extremely heavy weight. And it got to become such an extremely heavy weight because it's gone up so much. We're up $382,000 on the stock out of a cost base of $222,000. So that's how it got to be such a big weight. It wasn't like I put in crazy money into this stock. So now, in terms of how do I think Meta will perform next year, let's say in 2024, and am I looking to buy more shares of the stock? So let's address am I looking to buy more shares of stock? So is Meta still a buy? Yes, absolutely. Is Meta still easy money? Yes, absolutely. Is it as easy money as it was a year ago, year and a half ago? No. But it is still an easy money buy. With that being said, I will likely not be buying Meta stock in 2024. And why is that? Well, the reason being is it's such a heavy weight in the portfolio already, right? I mean, like we're talking about, this is 30% plus of the portfolio. It's already a little too heavy of a weight in general. And so when I can find a lot of other opportunities out there, so I feel comfortable just holding my Meta shares that I currently have. Would I probably be buying Meta shares if I didn't already own Meta? Probably. Yeah, I'd probably be buying. Now, how do I think Meta stock is going to perform in 2024? And the answer is, I think Meta stock will perform actually, surprisingly, pretty decent in 2024 again. Now, do I think it's going to have the sort of year it's had in 2023 where it's up, over a double up? No. But do I think Meta could have a year where the stock goes up 20%, 30%, which would be a phenomenal return? Absolutely. I do believe Meta could do that. And that's really regardless of what happens in the macroeconomic landscape, because I believe Meta is going to put up tremendous numbers this entire year. And if you look at the valuation metrics, it's very undervalued right now. So that's Meta. That's kind of what I'm thinking here. It is the biggest stock in the portfolio overall. Tesla, second biggest stock for me in the portfolio. So now, first off, before we get into Tesla, like you add up Tesla and you add up Meta, I have over $1 million in just those two stocks, right? And if you know the way I like to position my portfolios, I love to position my portfolios in the strongest of the strong companies. And, when I look at companies like Meta, companies like Tesla, and some of these others that are at the top of the food chain, like these are the strongest companies in the world, in my opinion. Like Tesla to be growing in an environment like we've been going through with very high interest rates, I mean, it's been pretty remarkable that they've still been able to put up growth even in that sort of environment. And when I look at the team that Tesla has, there's really no one on the planet that has a team on the engineering side like Tesla does. Like the things they're doing, when you look into the technology of the Cybertruck and you look at how many new technologies they've had to create to build the Cybertruck, it's remarkable. It's absolutely remarkable. Like you can't. There's no word choice to even describe like what they're really up to there and the things they're pulling off. They're doing things that, a lot of people that are experts in these industries thought this is impossible. You can't do this with steel. You can't do this with aerodynamics. You can't do this. You can't do that. And they break through the mold. So Tesla, $405,000. There's another one that became a huge weight in the portfolio once again because it went up so much, right? I mean, we're up $366,000 in the stock, and it's only a $39,000 investment in this portfolio. So when you have these sorts of stocks that are performing this well, they become heavyweights. And I don't worry about it. I mean, if I had put in that much money and it was, Meta and Tesla were this heavy of weights in the public count, I'd worry about it because I'd be like, crap, man, I think I got too overexposed. But because they've gone up so much, I'm not concerned about it. Now, am I looking to buy more Tesla shares in 2024? Do I think Tesla stock will, perform well or bad in 2024? So first off, I am personally not looking to add more Tesla shares unless the stock was to go down, let's say at some point during the year, which is always a possibility. There's a potential where Tesla stock could go down during the year and I add some more shares, right? We saw this. I actually added some shares in this portfolio at that was the beginning of this year in 2023, I actually added some more Tesla shares. So if this stock, has some sort of big downfall or something, I'll be there to pick up shares, like absolutely. How do I think the stock will perform in 2024? I'm not expecting a great year for Tesla stock in 2024. I'm expecting a very volatile year in 2024. I think there's going to be a lot of concern still about high interest rates, demand. I think that's still going to be a talk of EV demand, and I think that's going to be still a debate out there in 2024. Cybertruck, and does it take them a long time to get that thing ramped? If they don't really have it ramped very much in Q1, the bears are going to be saying they can't ramp it, it's impossible, this and that, right? That's what they're going to say. Like if Tesla doesn't come out the gates running in Q1 with Cybertruck, that's what the bears are going to run with the narrative. Tesla can't produce this thing. They only produce 8,000 units, 5,000 units, 10,000 units, whatever the number is, right? They can't do it. They can't do it. Elon messed up this time. That's going to be the debate. And so that could obviously get Tesla stock. So I wouldn't be surprised if, Tesla's one of those stocks that maybe it runs down, then runs back up. And overall for the year, it doesn't make a huge upward or downward move by the end of the year, essentially, right? It goes through this and even 2019 was a little bit like that for Tesla. And there was a huge Model 3 ramp year, and Tesla stock was kind of up and down throughout that year. If I recall, it ended up being a good year in 2019, but it was a very up and down year for Tesla, if I recall back then. So anyways, that's kind of my expectations with Tesla, and that's where I'm at. I'm extremely excited about the long term with Tesla. There's no doubt about that. 2024 I think can still be shaky, but I'm so excited about that one for the next 5-10 years, okay? Third biggest position up here is Amazing's on Amazon stock. So this is a stock I put a pretty good chunk of money in this year. It's one of the stocks I've been buying this year. It's performed pretty good for us so far. We're at $42,000 on the stock, $113,000 cost basis on this one. And so when it comes to Amazon, I've been always wanting to build a position in Amazon. And this was finally the year that I said, you know what, we're going to get this baby rolling. I think I actually technically started buying in 2022, but this is the year I really added a lot of shares. And so with the Amazon shares here, am I looking to add more? The answer is, if I didn't find that many other great opportunities and the stock went down under 125 specific, I would actually be looking to buy more Amazon shares, absolutely. Am I going to buy more Amazon shares, 150 plus? Probably not. I'll probably just hold what I have here. The thing I love about Amazon is obviously they have growth levers all over that company. The e-commerce side, it's like people just order more and more stuff every year from Amazon. I don't really see that trend ending anytime soon. Like people are just going to order more and more of everyday necessities, of just random things. Like I don't see that trend going away anytime soon. So they have all those growth levers. They have the advertising business, which is a straight profit machine for the company. On top of that, they have obviously AWS, which is a straight cash flow machine for the company, and AWS should get in a much better place in 2024. So how do I think Amazon stock will perform in 2024? I think it's actually going to be a pretty good year for Amazon stock. And the reason being is I think Amazon Web Services is going to see a nice reacceleration of growth. And I think that reacceleration of growth is going to excite a lot of people on Wall Street with a lot of big Wall Street money, because they care more about Amazon Web Services than anything else. I can tell you that. Like the e-commerce business, man, that's like back page story for Wall Street. They care about AWS. It's all about AWS. It's all about AWS. So if they come through and start having a nice reacceleration of growth in 2024 versus 2023, it's going to excite a lot of people in regards to stock. And you're going to have a lot of people start to FOMO into this one, 170, 175, 180, 185. So yeah, I wouldn't be surprised at all if it's a pretty good year for Amazon stock overall. Next up here, e.l.f. Beauty. This became a big weight in the portfolio because it went up so much, right? Up 1,648% on this stock, up $119,000. Cosmetics company, am I looking to buy more shares of e.l.f.? Surprisingly enough, believe it or not, I am actually looking to buy more e.l.f. shares. I've actually bought more e.l.f. shares in another portfolio here recently. And when it comes to e.l.f., the bottom line is their bottom line's exploding. I mean, the profitability of this company is going to the moon. I mean, they're like 2x and 3xing EPS on a year-over-year basis. I think they're going to continue that in 2024. Do I think the stock will perform well in 2024? And the answer is yes, I do. I absolutely do. I think there's a lot of people very underweight this stock. And I think if you want to own something in the health in the beauty area, the cosmetics area. I think this is a number one stock that people got to look at to put money into. They took the mantle away from Estee Lauder. Estee Lauder used to be that company, and Ulta really used to be that company. And in my personal opinion, e.l.f. has taken it away from those two, just dominant companies in the cosmetics industry, the beauty industry. They've taken it away now. And I think the number one stock over everything, over Estee, over Ulta, over everything, is e.l.f. Beauty. Like, they're unstoppable. So I love this company. I kind of wish it would go down in 2024 because I would love to buy more shares. But I just don't think it's that realistic. And I think people are going to continue to pile into this one. Next thing you know, it's going to be a $200+ stock, and we're looking like, wow, didn't it seem like just yesterday e.l.f. hit 100 and now it's at 200? Like, that's what I think is going to play out there. Next biggest stock is PayPal. So, PayPal, I'm pretty much buying the stock every single week right now. Literally, week after week after week after week after week. Right now, I'm buying the stock actively, which means I'm extremely bullish. When you see me just continue to buy a stock every single week, it means I'm very bullish on that stock overall. So in regards to PayPal, we're down about 10% on these shares right now, down about 13K. Do I plan on continuing to buy PayPal in 2024? And the answer is yes, at least into the first quarter. Probably not after the first quarter, but I do have a little more shares to add. I want to get to 2,000 shares in the public count, and I want to continue to add some more shares in my other portfolios as well. But so I'll likely continue to buy this one into Q1, and I'll likely stop buying the stock at some point in Q1. Now, with that being said, do I think it's going to be a great year, bad year, okay year for PayPal in 2024? And the answer is, I actually believe it can be a great year for PayPal stock in 2024. Great year. I personally think this could be my top performing stock in 2024. We'll see. It's not the end of the world if it's not, but I think there's a potential it could be. When I look at what Alex Chriss is doing with that company, when I look at all the innovation they're going to have in the company, when I think about the numbers they're going to put up in 2024, between the numbers, the innovation, and the belief that I think will start to come in Alex Chriss, in terms of Wall Street belief, I think there's going to be a lot of momentum that starts to pile into PayPal, and I think it will happen really quickly throughout 2024. Also, everybody that possibly wanted to sell PayPal shares already has over this past couple of years, right? If there's any last minute folks with the tax loss harvesting, they're getting rid of the shares this week and this coming week and next week. And other than that, like, we're good to go. So I think if anybody wanted to dump out of the stock, they already have gone and dumped out this year and took that loss. Because they really had like 3 years to basically take that PayPal loss, because the stock's been in a kind of a downward trend for 3 years. So I believe the stock will perform tremendous in 2024, and I'm very excited about that company. And I got 60 more shares at least to add in the public count. And I got some more shares to add in some other portfolios as well. Next up here, Palantir is the next biggest stock in the public count, $98,000 position. We're up 100% on the stock, up $49,000. So far, the position has started out really well. And I say started out because this is really a position that was built in 2022 and the beginning of this year in 2023. So when it comes to Palantir, am I looking to add more shares? This one, surprisingly enough, I might actually be looking to buy more shares of Palantir. Yes. And Palantir is a very tricky stock. And let me explain it like this, okay? Palantir, if you look at forward P, you might think, it's an overvalued stock, right? I just don't think that's the reality. I think Palantir is going to get much more profitable over the next 3 years than anybody's anticipating. And I mean, anybody's anticipating. And so I think they could eat up that forward P very quickly, where it goes from looking like an overvalued stock to a very undervalued stock very quickly. And so for that reason, I actually think Palantir is still a buy. With that being said, I feel pretty comfortable with the shares. And the problem is, I have so many other stocks that are great opportunities as well. We spoke about PayPal right now. There's several other stocks in the market that I think are great opportunities. So that's where it gets you a tough market. I mean, if it wasn't for PayPal and some of these other stocks I feel like are steal deals right now, I might still be buying more Palantir right now. But as far as what I have, I feel pretty comfortable. Like, it's not like I'm like, oh man, I wish I had more Palantir. Like, I feel comfortable with what I have, but with that being said, I wouldn't mind having some more shares, just to be honest. Now, how do I think the stock will perform in 2024? So, I believe Palantir stock could perform tremendous in 2024. And I know that sounds probably pretty crazy because we're coming off of an insane year for Palantir stock. I mean, Palantir, we'll see where the stock closes this year, but it could be at a 200% gain in 2023, which is insane. With that being said, I think it could actually perform great again and maybe be up 50% or something like that in 2024. And the reason being is I think that, like I said, with the EPS, I think the EPS could be explosive for the company. They're going to continue to pour in interest income. We know that for 2024, right? But on top of that, they just started to reach operating income. So I think you're going to see major business profits start to boom. Then you add on top the fact that they've taken the sales cycle from this massive long cycle into a very shortened cycle now. And I think you're going to see a lot more deals close with commercial customers specific in 2024 versus 2023. And that's going to excite a lot of people. So I think there's several, with Palantir, the great news is there's several elements here that I think are going to be pretty appealing for the stock in 2024. So that's kind of my feelings about Palantir and where we're at there. Okay. Next stock up here, Skyworks Solutions. This is a semiconductor company. We've done decent on it so far, 37%. That doesn't account for dividends received from the stocks. I have received a lot of dividends over the years. $19,000 gain. With Skyworks, am I looking to buy more shares? I don't know. I'm probably not. And the reason being is they're so reliant on overall end market demand for a ton of electronics. And so I just don't know if this is a stock I really am that excited about the next 5 to 10 years, like I was the last 5 to 10 years. The last 5 to 10 years was really exciting time for Skyworks Solutions with the smartphone boom and everything that was going on there. And now I kind of feel like the smartphone is starting to reach a little bit of the dark ages. And when I say the dark ages, what I mean by that is essentially a cycle that happens, and it happens with all technology, where not that many improvements happen anymore at this point in time. And you actually start to have a lot of price pressure that comes on the industry. You can look at the television industry for that. TVs. Like, think about TV technology. Is TV technology that much different than it was 10 years ago? No, 4K was around. All these things was around. Big screens, flat screens. You go into a Costco store and look at their flat screen section. I'm telling you, it does not look very much different than it looked 10 years ago. And so when I think about the smartphone industry, I really believe we're going into that time period where you're looking at these smartphones and you're like, dang, does this thing really look that much different? Does it act that much different than it did years ago? And so that's not the best thing for Skyworks Solutions. So not looking that forward to Skyworks stock unless the new iPhone's a boomer in terms of the booming sales. I don't know. I might find something better to put my money in over time than Skyworks. We'll see. Next one up here, Fubo. So this is more of a speculative stock. It started out pretty good for us so far in the public account. We have 15,000 shares in this particular account, and we're up 29%, up $11,000 on Fubo so far. It's a streaming company in the TV space, and they're just benefiting massively and will continue to benefit for years to go in the future. Them and YouTube TV seem like they're the most well-positioned for the cable cutting boom that's going on right now and will be for the next decade. People moving from satellite to streaming companies, and just Fubo and YouTube TV are just so well-positioned. So when it comes to Fubo, they really focus on sports, multi-view, things like that, and they really capture the sports fan, which I really love. Now, the company financials, if the company financials continue to get better and better throughout 2024, the stock's going to probably triple up during the year. Probably a triple up or quadruple up during the year, meaning the stock will probably go from $3 to $9 to maybe $12. And that's in 2024. But they have to continue to come through with strong subscriber numbers, strong revenue numbers, and they have to pull down that net loss in a substantial way. If they do that, it'll be a ridiculous year for Fubo, but they have to do that. Now, if they don't do that, let's say their losses start going up again and reaccelerating or something like that, then the stock's going back down to $1, $2 stock. But if they actually come through with their numbers this year in 2024, we're looking at $9 to $12 at this time next year. So we'll see. We'll see what happens in the numbers. I don't want to get too confident in terms of how much they'll improve that net loss, but looking at everything I look at in the financial statements, I believe the trend is going to continue in terms of bringing those losses down substantially. And as they continue to bring those losses down, then everybody starts to talk about, is 2025 going to be a profit year for the company? Then you go from literally entering this stock, in the first quarter of this year, people thought it was a bankruptcy candidate, to all of a sudden, by this time next year, people could be talking about how much money is Fubo going to make? on their bottom line. And that becomes a debate. And that's a huge 2-year switch where you go from, we thought this company might go bankrupt to like, now we're starting to figure out, is it going to make $100 million a quarter, $200 million a quarter, $50 million a quarter, $500 million a quarter, and everybody starts kind of running with projections and things like that, okay? So really like Fubo. It's speculative, absolutely, but I'm a huge believer in that one. It just has to be a smaller position for me in terms of the amount of money I put in. I only put in $37K. In my cost basis, it's about $37, $38K. It has to be smaller because it comes with its risk, right? Next one up here, Revolve. Well, Revolve, we've done decent. I mean, I took a ton of profits on Revolve a while back, and I'm actually starting to buy these shares actively now at this point in time in different portfolios. And I might buy more shares in this portfolio as well when it comes to Revolve next year. So when it comes to Revolve, we're up 19% on these shares, up $7,500 overall. Really like Revolve. Do I think the stock will perform well in 2024? And the answer is I actually do. I actually do believe the stock will perform very well in 2024. I think you're going to see all their financial metrics improve in the fiscal year, in the calendar year of 2024. And I think you'll see the revenue accelerate. I think you'll see the bottom line get in a much better place, and their margins start to improve, which is kind of the holy grail when it comes to stocks. And so a phenomenal balance sheet at the company. They're also buying back shares actively right now. So, and I am looking at consumer confidence, and the consumer I think is going to be in a much better place in 2024 versus 2023. 2023, I mean, it's just a year you came off of being destroyed by inflation, right? 2024, I don't think the consumer is going to be destroyed by inflation. I think, wage increases could be, still pretty decent in 2024. And so I think real wages will tick up, substantially. And so I think Revolve's a direct beneficiary of that. So I wouldn't mind buying some more shares. Next up here, Cheesecake Factory. So, Cheesecake Factory, you should know that one is a restaurant giant, right? They obviously own Cheesecake Factory. They own North Italia. They own a few other concepts that are smaller concepts as well that they have a lot of expansion opportunity with. But when it comes to Cheesecake Factory, am I looking to buy more shares? And how do I think the stock will perform in 2024? So, the answer is, am I looking to buy more shares? Yes, absolutely. This is an easy sleep well at night type stock. Like, their restaurants are always busy. They do big numbers. They always have very healthy margins for the restaurant industry. I've seen this company go through the great financial crisis. I've seen this company go through the Rona shutdowns where the restaurants had to be closed for several months. I've seen this company go through super high inflation, the highest inflation we've seen since the 1970s, which is horrible for the restaurant industry. So being that I've seen them go through all this stuff, makes me feel very confident and sleep very well at night, just loading up on Cheesecake and just being a big shareholder of that company for the next 5-10 years, okay? How do we think the stock will perform in 2024? I think it'll be decent. I'm not expecting a big boom year for Cheesecake Factory. Could I see the stock maybe being a 10%, 15% gainer? Sure. But I'm not expecting this to be some 50%, 70% up stock next year. I would welcome it if it happens, but I'm just not expecting that, to be honest. And I don't look at the Cheesecake Factory as needing to be that sort of company. I'm buying all these shares. I'm getting a 3 to 4% dividend yield on that. They're going to be able to up the dividend yield, I think, year after year for the next decade. So I think although I'm collecting a 3 to 4% dividend yield right now, I believe on my shares I'll eventually be collecting a 5% dividend yield, 6% dividend yield, 7% dividend yield. And, 5-10 years out, I'll be looking at the stock and I'll be like, based upon the shares I bought, I'm collecting a 9% dividend yield now, right? Which would be beautiful because then I'm getting my capital appreciation and then tons of dividend money. Buffett has shares of stocks he's owned for decades where he's getting like 100% type dividend yield a year based upon what he bought the shares at versus what those companies are paying out in dividends now. It's insane. So, that's the way I look at Cheesecake Factory. It can get me nice capital appreciation over the years. And I'll be able to make, obviously, a lot of dividend income, which I'll then go ahead and plug into other stocks. So I look at a Cheesecake Factory as stability. That's the way I look at a stock like this, okay? Next one up here, The Planet. So this stock's done, pretty poor for us, obviously. Not pretty poor, very poor. Down 45 on this one, 45K, 62% L on The Planet overall. So The Planet, am I looking to buy more shares? Potentially, but I need to get a lot of clarification from this company. I need to see what happens in Illinois. I need to see, what that opportunity really starts to look like. I need to see what happens in Florida, We will get a lot of those answers in the back half of 2024. We could get some of those answers in the front half of 2024, but it's really going to be the back half of 2024. We'll start to see what those opportunities are looking like on the revenue side, on the profitability side, on the margin side. So I kind of want to buy more Planet, but I'm kind of just sitting back and I'm waiting to see kind of what happens with this business model for right now. And so I'm just kind of holding, kind of just waiting to see. And I don't want to risk really much more capital in the Planet because I'm like, I want to see what happens because these are fundamentally kind of changing the business model, and I don't know how they're going to go. They could go great, and Florida could be an insanely profitable market. And from what I heard, Florida is pretty much the best market out there in terms of this particular product that they sell, right? So, but I want to see. So, do I think it could be a good year for Planet in 2024? There could potentially be. It's a wild card. I think this is a complete lottery ticket wild card stock. Right now, because we don't have any clarification on Illinois or Florida and how good or bad those opportunities really are. We just got to wait. So playing a little bit of a waiting game in regards to that. On the last conference call, they did talk about the Orange County location has gotten close to break even, which is a very good sign. That's a very good sign. Vegas always puts up Vegas numbers, right? Vegas always should be strong overall. And it does look like the market for this particular product in Vegas has started to kind of trough in terms of pricing. And so that could be upside maybe for next year. Now, Avant plays, it's a company in the same industry, but they play a little bit different, right? But the thing, I got to say, I'm much more impressed with Avant and kind of their strategy is a little more clear to me than the Planet actually right now. So if I am actually actively buying one of these stocks, it's actually Avant over Planet right now. And just because their numbers have improved so dramatically, they're flirting with going positive on the net income basis. And so if they flip over to the net income positive basis and they can stay there, like that's a game changer for the stock overall and the amount of respect the stock will start to get. Because, if you're positive on adjusted EBITDA numbers, people are like, if this company can actually get positive on a net income, true net income basis, on a GAAP basis, quarter in, quarter out, game changer for the stock. And I mean, that's one of those stocks that just, I don't even want to put a number on it in terms of percentage because it's going to sound so ridiculous that people are going to be like, what? Could go up that much? But it's one of those sorts of companies. And so they just got to continue to improve their numbers quarter after quarter. Do I think it could be a good year for the company in 2024? And the answer is, I think it could be a great year for the stock. But they've got to come through and they got to get to GAAP profitability, GAAP net income positive. Woo-wee. If we can do that, and then Norton, the team, is confident they're going to stay there, oh my gosh, it's going to be a lot of fun. It's going to be a lot of fun. So, yeah, I might buy some more shares here and there, okay? Now, Target. This is, I believe, the smallest stock position I have in the portfolio, 120 shares, up 4%. It's a pretty dang new position for me here. Now, am I looking to buy more Target shares? How do I think the stock will perform overall? So, and then we'll get to the hedges. I got hedges to show you right now, and then we'll get to how the portfolios perform versus S&P 500 over the past 5 years, and I'll show you the entire portfolio all together here. But in terms of Target, am I looking to buy more shares? Answer is yes. Kind of look at it like a Cheesecake Factory, just a very easy stock for me to continue to load up on shares. I think the stock's very undervalued right now, and hold those shares for the next many years. And just one of those sleep well at night type stocks. I think they're a tremendous company. I think they've gone through a really tough time over the past year and a half to 2 years, and I think they'll work past that. And I think there'll be much brighter days ahead for Target over the next several years. Now, in terms of Target, how do we think the stock will perform in 24? And the answer is I think it will perform well. I think it will actually probably outperform Walmart quite significantly. There's been a huge move over the last couple of years out of Target into Walmart because the consumer got hit so bad by inflation and consumer confidence destroyed, all those sorts of things. I think over the next couple of years, you're going to see money rotate from Walmart actually into Target as a consumer gets more and more confident out there. And as we see inflation, let's just call it not be a problem for us over at least the next year. We'll see about future years, but for at least the next 12 months, inflation is not going to be a problem. I think Target will benefit from that and the consumer feeling a little more confident and better. So I think they'll put up nice holiday numbers, and I think Target's looking good. So definitely looking to buy more shares of Target. Okay. Now let's get into hedges. Then we'll get into the portfolio versus S&P 500 over the past 5 years, and then we'll get into the portfolio in total. Okay. So when I look at hedges, I'm basically they're insurance for the portfolio. That's the best way I think about it. They're insurance. So this is in case the market tanks. massive recession comes, massive job losses, whatever, okay? Market tanks huge. You see the market down 20, 30, 40%. The hedges are insurance, right? No different than car insurance or homeowners insurance. So first one up here, Polaris. These ones are performing pretty darn well for 62%. Polaris sells a lot of the, fun ATVs and all that fun stuff. I guess you can say that you go outdoors and you take camping and you ride around the desert with and all those sorts of things, right? And the business has been, starting to really reach a tough place. And the reason being is obviously the consumer got hit by inflation and interest rates have gone up substantially. So this sort of business model is just not the business model for this time period we're going through right now, right? And I don't think it's going to improve in 2024. I think their business is going to continue to be weak. I think you're going to see a lot of dealership markdowns, discounting. I think you're going to see a lot of margin pressures. I think other Polaris competitors are going to get very desperate around pricing, steal market share potentially from Polaris, and because Polaris is kind of the top of the food chain a little bit in their space. And so I think that's going to make it a very tough margin year for Polaris and a very tough profitability year and revenue year. So yeah, not a stock I think is going to necessarily perform great unless we get some insane bull market in terms of all stocks next year. Outside of that scenario, I don't think Polaris is that one. However, that being said, I wouldn't mind getting out of these puts at some point in the next few months. I really don't want to hold it all the way to December of 2024. I wouldn't mind taking my profit in the next few months on this one, rolling into something I think is more attractive, okay? Next one up here is I have some Tesla insurance. These are expire in September 2024, 255 puts. These ones are basically break even right now. And I just have 2 option contracts in regards to that one, just in case, let's say there's, the first half of the year, everybody's, oh, Cybertruck, they can't ramp it. Oh my gosh, they're losing so much money selling these Cybertrucks. Look at their margins getting worse and worse. They're never going to improve their margin. Let's say, Wall Street runs with that and that becomes the thought process. And let's say also the market's getting hit. Let's say there's a lot of profit taken in the Qs. Let's say in the first quarter of the year, which I think is a realistic possibility. Could be a situation where maybe Tesla stock tanks in the short term. And that would be an opportunity that these would obviously print money. These would probably go from $8,500 to maybe $12,000 or $14,000 worth of value. And I go ahead and flip out of those at that point in time. Maybe put that into other hedges or maybe put that in long Tesla shares at that point in time. Okay. Next hedge up here, I don't like this one. I'll be honest with you guys. It's Toll Brothers. I don't like this hedge. The problem is people just keep buying new dang houses. and it's just like, what are you going to do, right? I mean, the housing market's been horrible, but the new home builders just continue to benefit from low inventory. And people looking out there, and there's just such low inventory, there's not really great homes to buy, so they buy a new home. And then these home builders are also doing all these, basically like, how do we put it? They're basically doing these like mortgage rate buy downs, where essentially it makes the mortgage payment much cheaper in the first year, 2 years, or 3 years. And so they're doing all that. It's benefiting, and it's just, it's a tough one, man, because it seems like it should be a perfect hedge for the time period we're going through with mortgage rates in the 7s and 8s we've been seeing over the past many months. But it's just, people keep buying new homes, and it's just like, what are you going to do, man? What are you going to do? It's what it is. Okay, next one up here, Chipotle. So, yeah, probably even a worse hedge than Toll. The problem with Chipotle is, in kind of my thought process is, holy smokes, this bee wants to eat me. Don't eat me, bee. The problem with this Chipotle hedge is this bee is all over me. Now, the problem with this Chipotle hedge is freaking Chipotle. And it trades at super high multiples, but when it comes to Chipotle, like, people just want to own the stock because it's such a great company. So I don't love it, man. I don't love it. It is what it is, okay? Alrighty, folks. I don't know why I have this image on, but that's the new membership cards for the private group. That's the new membership cards for the private group. Can you guess the stock? Can you guess what stock that is? It is a particular stock. And we designed this about 3 or 4 weeks ago. So if you're thinking about a stock chart from a few weeks ago, what stock is it? Okay, those are our new membership cards for all new private group members for 2024. So here's the portfolio in total. Overall, I'm really happy with the portfolio. Obviously, it's very top heavy with Meta and Tesla, but it is what it is. The stocks have gone up so much, and I'm not just going to sell companies just because they became a big weight because they went up a bunch, like bottom line. In regards to that. Performance versus the market, we've crushed it. Absolutely crushed it the past 5 years. Whether you look at a time-weighted return rate of return versus S&P 500, whether you look at a money-weighted return versus S&P 500, either way you slice it, we've crushed, obliterated the S&P 500 over the past 5 years. Also destroyed the S&P or the Dow as well, and bonds. Oh my gosh. Okay, I mean, this is a cumulative return for the portfolio past 5 years, 222%. If you're looking at time weighted, if you're looking at money weighted, 138% versus S&P 500's at 80%. The Dow's at the Dow U.S. Total Stock Market Index at 73% past 5 years. And if you look at bonds, imagine if I've been positioned in bonds the past 5 years, 3.6%. And the incredible thing about that is, this comes in with a time period where in 2021 I really got lost and was, in the clown market being a clown, right? And so I've still destroyed the market, even being a clown in the clown market. Like, that's crazy. Like, whew. There's maybe something to this, what I'm up to here, okay? Appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. If you're looking to apply, join my private group, get access to all my courses, 6 and 7-figure Discord chat, see the moves I'm making in this portfolio each and every week, then check out the pinned comment down there. You can fill out an application. We see if we can get you in there either this week or next week. Much love and have a great day.